Donald Trump and his Vice President J.D. Vance have some unorthodox economic policies. Higher tariffs, lower tax, devalue the dollar, and cut immigration. But will these policies work? I'll let you decide, but here they are. Firstly, at the recent Republican convention, Donald Trump talked about ending the inflation nightmare and bringing prices down very quickly. Now, inflation in the US has fallen to around 2.9%, not much higher than the actual target of 2%. But American households are still feeling the effect of that 20% increase in a price level. Food prices increased even more. But when Trump talks about bringing prices back down, what does he mean? Because falling prices, deflation, is actually quite rare. The last time America had deflation was really the 1930s. Prices fell because of the Great Depression, rising unemployment, bank failures. Bit of a disaster. The UK also had deflation in the 1920s when Winston Churchill took the UK back onto the gold standard. John Maynard Keynes was very critical, saying this will be a disaster because putting prices down can actually be very damaging from an economic point of view. It increases the real value of debt, consumers are unwilling to spend, and when prices are falling, wages are often cut too. So probably Trump doesn't actually mean deflation, because if we look at the rest of his policies, they tend to be much more inflationary. In fact, both Trump and Vance have talked about devaluing the dollar, because when the dollar is strong, US exports are more expensive. It's cheaper to buy imports from countries like China, and this is a factor behind the US current account deficit, the fact that the US imports so much from China, and this has caused a loss of manufacturing jobs, and it created a lot of heartache in the former industrial areas of America, the Rust Belt in the Midwest and Northeast. And the argument is that if you devalue the dollar, American exports are cheaper, more competitive, and this will help boost exports and bring manufacturing jobs back to the United States. Now that sounds good, but there is a problem because devaluing the dollar makes exports cheaper, but imports more expensive. Prices of many goods will go up, and this will contribute to inflation and higher cost of living. There's no way around that. Also, in the long term, relying on a devaluation in the currency to boost competitiveness is no guarantee that you will actually have a boost to manufacturing. It takes a long time for jobs to come back. The US comparative advantage is probably more in the service sector. Also, a practical problem is that the dollar is not on a fixed exchange rate. You can't just devalue the dollar. What you would have to do is impose exchange rate controls, print dollars and buy foreign currency like the yuan. And if that didn't work, you could also take control of the Federal Reserve and cut interest rates. Cutting interest rates would definitely devalue the dollar, but of course it would add to inflationary pressures. Interest rates are high for a reason. Also, is a trade deficit such a bad thing anyway? Because it's only half of the story. Now, the US does have a trade deficit with China. The US imports more than it exports. But the other side of the coin is that the US has a capital surplus. Basically, when China exports their goods to America, they invest the surplus back into America, buying, say, US government bonds. They do that partly to keep the yuan undervalued. But the advantage for America is that they get a lot of international people buying US bonds, which helps to reduce bond yields, make it easier for America to borrow. So a trade deficit is only half of the equation. If you devalue the dollar, US debt becomes less attractive, and it will lead to higher bond yields, higher borrowing costs. And this might be important for the next policy. The next policy is lower tax. The most significant legislation passed during the last Trump administration was the Tax Cut and Job Act of 2018. This involved significant cuts to corporation tax and other income tax cuts too. Now, Trump has toyed with the idea of reducing corporation tax to 15%, which he argues would encourage business to invest and promote growth. Now, the CBO estimated that the impact of the act was to add 1.9 trillion US dollars to the national debt, and that included some minor impact on boosting economic growth. The Independent Tax Policy Centre argued that because of the Tax Cut Act, GDP was around 0.3% higher by 2027 because of the law. The impact of the tax cuts were also much greatest for the richest 20%, who benefited from around $205 billion compared to just $1.9 billion for the poorest. Perhaps the biggest concern about more tax cuts in America is the impact on US borrowing. In recent years, recent decades, debt has increased, the deficit has widened. Despite high growth in recent years, the deficit's got bigger. And government finances are increasingly stretched because of the ageing population. The baby boomer generation is ageing, and this would increase debt even more. Going back to tax cuts, it raises the big question of how much can the government borrow? The US, of course, can borrow a lot. They can always print their own currency. There's a high international demand for buying US debt. But there is a limit, especially if you start to devalue the dollar. It may start to be less attractive to buy US debt. And with an ageing population, there's not an unlimited amount the US can borrow unless you start to cause inflationary pressures because you're financing the deficit by just printing money. Donald Trump is a big fan of tariffs. Tariffs make imports less competitive and so help domestic US manufacturers. The aim of tariffs is to bring jobs back from countries like China back to the United States. And some domestic firms will benefit from tariffs. For example, Chinese electric vehicles are coming onto the market for less than $13,000, much less than their US equivalents. Tariffs could help the US electric vehicle market to grow and become better over time and be more competitive. Similarly, these tariffs could be applied to areas like steel, solar panels, renewable batteries and things like that. Now, a good justification for tariffs at the moment is that the Chinese government are offering Chinese manufacturers big subsidies to artificially make them more competitive. So in a way, there's not a fair trading field because Chinese goods are part subsidized. So this is an argument, at least in part, for some tariffs. Back in 1800, the United States used to get over 90% of their federal revenue from tariffs alone. Although in recent decades this has fallen to less than 1%. At one point, Trump suggested America could get rid of income tax completely and replace it with tariffs. Now, this is really unfeasible. In 2022, US imports were around 4 trillion and federal income tax was around 3.4 trillion. So you would need a tariff rate of 85% and assume that this tax wouldn't reduce demand at all, which of course it would. So basically, income tax revenue really much higher than the potential revenue you can get from tariffs. But the bigger problem is that tariffs would raise the price for consumers. Households already pay an extra $600 a year because of the current Trump-Biden tariffs. Not necessarily particularly noticeable, but they do start to add up. And also, there's a second problem of tariffs, not often mentioned when people talk about it, but basically it's going to cause retaliation. When the US placed tariffs on Chinese steel, China retaliated by putting tariffs on US soybeans. So US farmers were really distraught to find they couldn't sell soybeans to China like they used to. And the federal government actually had to offer subsidies to the American farmers to compensate them from the trade war. So it's an example of how a trade war can escalate, causing unexpected losers. And thirdly, another not so noticeable effect is that if consumers are paying higher price for imports, then they have less discretionary income to spend on other goods and services. So some American firms would notice a slight fall in demand, leading to less job creation. So tariffs create winners and losers. Some will definitely benefit, but some will lose as well. Now, the current tariffs are in a way relatively mild. The Tax Foundation estimates the Trump-Biden tariffs have reduced GDP by 0.2%. Not really very noticeable. But if Trump were elected, He has promised to increase tariffs by another $524 billion, which is really quite significant. You would start to see quite big price rises, and according to the Tax Foundation, could reduce GDP by 0.8%, which is starting to be a bit more significant, although worth mentioning, not the end of the world. People probably wouldn't notice it in the macro effect, but I think they would notice it in terms of the price of goods. Now, tariffs might protect some firms, but there's no guarantee of jobs suddenly coming back to America. It takes a long time for firms to adjust to comparative advantage and things like that. The final big policy is to cut immigration, both illegal and legal immigration, even deport illegal immigrants. Now, immigration has definitely been a factor in boosting US economic growth, because if you have more people, then there's more GDP. The big question is, does immigration increase GDP per capita? What effect does it have on wages and employment for native-born workers? The truth is, it doesn't have a huge effect either way. America has definitely seen periods of really rapid rise in real wages during periods of high immigration. High immigration can help economic growth and higher wages. There's no guarantee. There's so many other factors affecting wages apart from migration. But it is definitely untrue to say that migrants take native-born jobs. Now, when a migrant takes a job in America, there isn't a fixed number of jobs. If there's more people, then there'll be more demand. And so there's new jobs created as a result of that. Back in 1800, the population of America was very low. It wasn't a fixed number of jobs. As more people came and more people moved, more jobs, more demand, and there's no massive increase in unemployment. Since 2020, there have been 8 million new jobs for native-born Americans and 5 million for foreign-born. So it shows that both have done well in getting jobs, partly as a result of the COVID recovery. Nevertheless, despite all this, many Americans do feel the economy is rigged against them and that they struggle to make a living despite high GDP per capita. This video explains why.